Global Times, 5th of March 2023, U.S. funding restraints won't affect China's high-tech development, say experts. China has weaponized the Chinese diaspora around the globe to carry out its will voluntarily or under the coercion of family members in China. China will use any means to steal the technology it needs. Global investors continue to flock to China's capital and the country overall, Chinese analysts said on Sunday. According to reports, the U.S. is ready to redouble its decoupling efforts against China's high-tech sectors by erecting obstacles to prevent American investors from investing heavily in those sectors. The Wall Street Journal reported on Friday, citing people familiar with the matter, that the new program is anticipated to encompass private equity and venture capital investments in advanced semiconductors, quantum computing, and some types of artificial intelligence. Although not surprising, Ma Jiwa, a seasoned industry analyst, told the Global Times on Sunday that Washington's move to target financial sectors of China's high-tech development will not be effective. According to Ma, investment restrictions will take a fair amount of time to have the desired effects for Washington, and there will likely be several unforeseen circumstances along the road. According to industry experts, the most recent possible action could have a limited but short-term effect on the financing of some projects. Experts noted that there are many alternative investors from China and abroad, and China's high-tech developers no longer have a severe lack of capital. They added that Wall Street would suffer significantly if it missed the growth possibilities in the enormous Chinese market. U.S. investors have consistently demonstrated an interest in China's stock market and the industrial sector. According to a recent survey by the American Chamber of Commerce in China, many U.S. businesses continue to find the need to be a desirable place to engage. The 1.4 billion consumers in China continue to attract member companies because of the abundance of possibilities they present, according to the Chamber, which also revealed that 74% of the businesses surveyed said they are not contemplating moving manufacturing or sourcing outside of China. According to a report published in 2021 by the Wall Street Journal and the U.S. research firm Rhodium Group, U.S. VC firms, chip industry titans, and other private investors took part in 58 deals in China's semiconductor industry from 2017 through 2020, more than doubling the amount from the previous 4 years. A sector that best exemplifies Washington's ruthless campaign against China's high-tech growth is the semiconductor industry. Despite repeated U.S. attacks, China has continued to be the world's biggest chip market for years, and Chinese manufacturers are expanding their market share globally. In addition, China has continued to be one of the most popular destinations for FDI in recent years. According to the Ministry of Commerce statistics, FDI on the Chinese mainland increased by 6.3% annually to 1.23 trillion yuan, $178 billion, in 2022. MOFCOM. High-tech sectors attracted 445 billion yuan, an increase of 28.3%. Important companies like South Korea, Germany, the UK, and Japan saw a significant increase in their investment in China. In the post-COVID period, experts claim that it will be difficult for international capital to locate another market with as much potential as China. Xu Jiuding, a MOFCOM spokesperson, commented on a prior report regarding the Biden administration's potential investment restrictions on some Chinese technology companies on February 16. He said that the U.S. government's intervention in business as routine business decisions through administrative approaches undermines market rules and international economic and trade orders and harms the interests of companies and investors. According to Xu, it is detrimental to the interests of China, the U.S., and the entire globe. Dong Xiaopeng, a senior research fellow at the Changyang Institute for Financial Studies at the Renmin University of China, told the Global Times that the U.S. could not abandon its hegemonic mindset and refusal to acknowledge the reality of other nations' growth. According to Dong, such power struggles and trade barriers are unquestionably detrimental to the advancement of science and technology worldwide. Since the semiconductor industry is global and has long depended heavily on international cooperation and the division of labor, the China Semiconductor Industry Association recently stated that any act that undermines the global industrial system would have a profound negative impact on the lives and development of people everywhere. According to the association, openness and cooperation are the best methods to create value and advance global progress.